S&P 500 with dividends is again hitting 52-week highs. However, can a short-term tapping pattern materialize for stocks? Junk that also failed to break out of the range so far, unfortunately. And gold is, I don't think, is done correcting yet, while cryptos are still in danger. Hello again, this is Alexander with MasterChartsTrading.com market recap for June 9th, 2023. As always, don't forget to do the 3 actions. Click on the like button, subscribe to the channel, share this video with others, make a comment if you have any questions or comments. Let's get going. S&P 500. We're looking at S&P 500, the index, on TradingView.com. This is a TradingView.com interface. You can get a free TradingView.com interface. This is it. The symbol for S&P 500 index is this, SPX, and make sure you choose the one that's CBOE, Chicago Board of Options Exchange. So, looking at this chart, I'm going to turn off my indicator for, well, actually, no, let's not do that. Looking at this chart, the previous high was at August 16th of last year, 2022. It hit 43.25. Today, Friday, June 9th, we hit Friday, June 9th, today, 43.22. So we're 3 points away from all-time highs, I'm sorry, from 52-week highs for the index without the dividends. So looking at the index with dividends, this is S&P 500 ETF SPY. Notice what I'm showing you, SPY. Now, to make it adjusted for dividends, you need to click on this button at the lower right-hand corner where I'm hovering. It says ADJ. I can unclick it and it will become the same as I just showed you, whereas today's prices are very tiny below previous August 2022 highs. However, if we include the dividends into this equation, we are indeed making 52-week highs. And we've been doing this since last week, and I already pointed out the fact that we have been making 52-week highs, so this is actually very good news for stocks in general. Today's candlestick, unfortunately, does look a bit toppy. So what does that mean? So this candlestick right there, which one I'm hovering, it looks like a shooting star candlestick. I'm gonna zoom in on it, just a second. There it is. There's today's candlestick. I'm circling it right now. So in a candlestick analysis, you can learn about it. It's not magic. You can go to StockCharts.com and go to Chart School, or pretty much anywhere, and you can learn about shooting star candlestick. There it is, shooting star candlestick. So when I was learning, just beginning my trading career over 10 years ago, I was learning a lot from StockCharts.com. It's an excellent resource. So the way to understand a shooting star candlestick is as follows. So today, sometime throughout the day, prices came up, high, and they came down low. So you can see those shadows at the top and shadow at the bottom. The real body is actually really small. It's tiny. I'm gonna kind of zoom in rather. So notice that the real body is small and red. Additionally, it's at the lower half of the candlestick. So it's pretty much a classical kind of shooting star candlestick. Some people could call it a doji candle, a doji star, because this real body is very small. So basically this means that the open and the close were very, right next to each other. We opened, this is S&P 500 ETF SPY, so we opened at 429.96 and we closed at 429.90. Yeah, we lost 0.2 6 points. So basically we didn't do much. We went up, we went down, but really we stayed the same. So the important part of this candlestick is this large shadow out of the top of the candlestick. So that this candlestick just means that there is resistance. Okay, resistance up here, and it's reasonable to understand it because we are literally approaching 52-week highs for the index. So this is the index again without the dividends. We're very close to 52-week highs, so it's reasonable for people who, for example, if you are lucky enough to get in around October and the lows, you want to take profits around the 52-week highs. As a matter of fact, I did just that with my QQQ trade, NASDAQ 100 ETF. I bought, I was already, as you probably heard me say it multiple occasions, I was questioning this entire rhetoric of a bear market back in October, November of last year. I went ahead and I acted on it, and I bought my QQQ, I bought NASDAQ in January 20th of this year. And I went ahead and I decided to take some profits. I took some money off the table. I sold on 7th of June, just a few days ago. I sold about 1/6 of a position. It just was convenient. I'm not yet like convinced that we're done going up, but it's nice to have a profit. I locked in some profit. Obviously, my stop is now well above my entry. So profit taken is most likely taking place right now, and just looking at this chart, it is somewhat overextended to the upside. No matter how you slice it, but let's just use my indicators. On this chart we see this green, blue, red, and yellow line. You can find out more about them by going to the description of the video. So right now the length or the distance from the blue line to the price action currently is around 11%. Yet just a few weeks ago, I don't know, let's say in May, the distance between price action and the blue line was 7%. So we're definitely overextended away from the sort of like a midpoint of the price action. What this means is that people are saying, they're doing the same thing I do. We're looking at this chart and like, okay, yeah, let's take some money off the table. We have profit, might as well just lock in some profits and see what happens. So when that happens, people start selling. There is now going to be a predominance of sellers, and the pullback might materialize. It might not materialize, but it's actually quite reasonable at this point for this pullback to indeed materialize. So first level to watch would be the green line, which is currently for, well, let's go to SPX. The green line is currently at 41.85. So about 2.7%. So you can read about them, my indicators, and you can learn about them in the description and find out if they're right for you. But I use them all the time. They're very useful to see support resistance. So what we did before, we bought on breakout above the blue line. The trade went obviously in our favor. The trade started here in April of this year, April 12th, where I'm hovering. This is the beginning of a new bull market for S&P 500. If we do get a pullback and we pull back around 2 to 3% towards the green line, very often we just kind of bottom there and make a new high. If that doesn't happen, then we're looking at a deeper correction somewhere into the vicinity of the blue line, and that is around 4,000 for S&P 500. So we're looking, if this continues, if the correction does actually unfold, then we're looking at around 6%. So at that point, we will definitely say that S&P 500 is 100% definitely oversold and within a bigger uptrend. We want to be buying it. We want to buy stocks now because the S&P 500 is in an uptrend. So we want to be thinking about buying, but at what price level? Right now, I don't want to be buying. I want to be actually taking profits, which is what I'm doing. If we pull back towards the green line around 2 to 3% from today's level, that is like mildly oversold, and I'm still kind of would be reluctant to be buying at that point. However, if we pull back significantly towards the blue line, at that point I will definitely be interested in buying stocks again. So let's see what happens. Right now, taking profits, if you have a profitable position, makes sense to me. Do you think, does it make sense to you guys as well? Make a comment, and maybe we'll come to some sort of a consensus. Another reason why I'm a little bit more pessimistic than I was, even last week, is because we did not get a breakout for JNK. So I'm going to turn off the indicators for a second. We're looking at JNK, junk debt. So junk debt, high yield bonds are important to the health of stock market. They usually do the same thing as the stocks. So junk debt and stocks correlate highly. They're doing the same thing in general as the stocks are doing. So if junk debt is moving higher, stocks should be moving higher. Vice versa. If junk debt is moving lower, stocks should be moving lower. They are doing about the same thing. However, whereas stocks are actually already touching 52-week highs, high yield bonds are not nowhere near 52-week highs. They're trying to still get over this April 13 high. So today, again, we touched that level. Well, actually, this is the first time we touched that level. So is it a, pretty decent attempt to break out above those levels? Ideally, we should be above the February highs, like the S&P 500 is well above February 2023, this year high. We're actually approaching 2022 highs. Junk debt hasn't yet been able to do that, and today junk debt tried to get above this April 13 highs and so far failed. So another shooting star candlestick, I'm going to zoom in. You can clearly identify it right there. Today's candlestick is definitely a shooting star candlestick. It's also at previous highs, so it's manifestation of resistance. Resistance means that bulls were stopped. People who think that the stock market, or in this case junk debt, will continue higher, were stopped in their tracks, and bears decided to start selling. So it's not a great sign, obviously. However, I still think that stocks and junk debt also are in an uptrend. You can see up blue arrows. These are actual alerts, and this is also an entry into a new bull market for the high yield bonds. What I'm thinking is next, unless we just kind of break out, especially about this February 2nd highs, if we just kind of pop higher on Monday, it will be ideal. If we don't, then I think again it's quite reasonable to expect a pullback towards the blue support resistance line, which is currently around 3% down for high yield bonds. At that point, once again, the high yield bonds junk that will become oversold, and we would become interested in buying it again. So let's see what happens. Let's switch gears now. We're looking at dollar currency index. So back here in May, early May, I said that dollar has held support. So notice the support. Basically previous lows from February, late February, late January, early February of 2023 here. The price of DXY, this is DXY dollar index, came down again toward the same levels in mid-April, April 13th, 14th, and yet again came down to those same levels in early May. And then it rallied. So this is what I call a support was held, indeed, on multiple retests. And we did rally. I put in this arrow back in May. we're rallied, and we kind of came up above this yellow support resistance line and sort of coming back down towards it right now. So I don't think we're done. I think dollar has a little bit more upside left in it. Maybe we'll kind of just like bounce around a little bit here. Yellow line is currently acting as support. How do I know it? Notice this candle right there where I'm hovering, 18th of May, breakout above it. 2 times we held on 19th of May, 22nd of May, actually 3 times on 23rd of May. We touched this yellow line and then rallied off of it as high as 31st of May right here. We're coming down towards it again. We might again touch it. If we don't break below it, if we don't close below it, then most likely we will continue higher towards this red line. So at the red line, I will say, okay, we're now overbought. Okay, so since the dollar index is generally speaking in a downtrend, this is the beginning of a downtrend where I'm hovering, 12th of January of this year. Before that, it was in an uptrend. And it turned around right there. So dollar is in a downtrend, and if we become overbought by touching this red support resistance line, probably sometime in the next few weeks, we will see if we want to sell it short again. Okay, so dollar in a downtrend, when it becomes overbought, we want to sell it short. Makes perfect sense. Why do we care about the dollar? Because we trade gold. So here we are looking at XAU USD. So once again, XAU, gold divided by US dollar. If this bottom part of the equation, US dollar, becomes bigger, heavier, it will pull this currency pair lower. We're witnessing something of that nature. So dollar, or rather gold, made progressively higher highs and culminated right there on the 4th of May, and it's now coming down towards this blue support resistance line. Again, I don't think we're yet done. If dollar continues higher, then gold will be under pressure. Gold is about 2 to 3% away from becoming quote-unquote officially oversold. And at that point, we want to be thinking about buying it. Oversold within a bigger uptrend. Okay, gold will become oversold within a bigger uptrend, and this is where you want to be buying it. We did just that right there where I'm hovering in May, beginning of May of this year. Will this happen? Most likely yes, but I don't know exactly the scenario. Obviously, it could be we could trade sideways for a little while and then finally touch the blue line, or we could just collapse towards the blue line, or something entirely different could happen. So we're just like watching the possibilities right now. But overall, once again, gold is in an uptrend, dollar is in a downtrend. We just need to wait until they have completed their bounce respective, gold pullback and dollar a respective bounce. And let's wrap up today with Bitcoin BTC/USD. So if you haven't heard, Securities and Exchange Commission have really cracked down on pretty much everything cryptocurrency related. There is the beginning of this crackdown where I'm hovering, the 5th of June, Monday of this week. We came down, towards the blue line. Haven't yet touched it. So I drew this orange kind of line. I drew it in for my subscribers a few days ago. I drew it on the June 2nd. We actually came down very close to it. I don't think we're done correcting. I think we need to break below this blue line. And here's where things get kind of interesting. So I don't normally look at fundamentals, but if this crackdown continues, then there could be, pretty severe repercussions for exchanges such as Coinbase. Coinbase is huge, right? And what if they go under? What are you going to do is, are you going to be able to, buy and sell Bitcoin? It could become very problematic very fast, although there are Bitcoin futures, so go figure with that. So looking at this chart, we just need to wait and see. Right now I still think that Bitcoin is in an uptrend. So Bitcoin uptrend began where I'm hovering in February of this year. It closed above my blue support resistance line. You can find out more about it by going to the description of this video. But this is all I really needed to know. You had a killer opportunity to buy it right there on 12th of March. Our trigger to buy is a close above the blue support resistance line. It went from 22,000 rather to 31,000, so very nice run. Now we're again coming down towards oversold levels, so let's wait and see until we get to those oversold levels. Thank you for staying with me until the very end of the presentation. Please again hit the like button, subscribe to this channel, share this video, make a comment. Did you like something? Did you not like something? Once you're done so, please head over to MasterChartsTrading.com, click on sign up for one of my products. So once again, I sell the indicators. These indicators are available. This green, blue, red, and yellow lines are used to trade various securities, and you can see it's quite easy. All you need to know, all you gotta do is just put them on your chart. How to put them on your chart? You need to open a TradingView account, free. They're free. And then once you open a free TradingView account, go over to my site, sign up for the indicators. Let me know your user ID, and I'll open the door for you so that the indicators will appear on your account. It's actually quite easy, even though it sounds daunting right now. It's not. It'll take you a couple of minutes. I also send out daily newsletters. This week, for example, we will be covering a whole bunch of stocks that we look at on daily basis. For example, crude oil, natural gas will be covered in that members only video. Lots of exchange traded funds, large cap stocks, blue chips like American Express, ExxonMobil, Kraft Heinz, and lots of various speculative shares like Airbnb, Asana, Bridge Biopharma, Confluent, Cipher Mining, DigitalOcean, Cloudflare, Riot Blockchain, Skynexus, SoFi Tech, Splunk, and Upstart, to name a few, as well as some of the gold related. So that is covered in the newsletter. And of course, the best deal is to get both trading indicators and newsletters at $59.95 per month. I think it's a great deal, and usually people pay for a year worth of subscription within a couple of trades. That's it for this week's recap. Thank you for watching again, and have another great trading week. Bye bye.